5 minutes to go before the final bell rings. While the S&P 500 officially popped out of bear market territory for equities yesterday, the question now becomes, is this truly an end to the bear cycle, or is it just one of those trickster bear market rallies? Prudent Bear founder and now Ranger Alternative Management Chief Investment Officer David Tice is known for many, many years as always watching the bearish trade here. David, what do you think? Is this an exit out of the cycle, or will we see more, I guess, violent downside moves?
Unfortunately, Liz, I think we have a lot more pain ahead of us. This is truly a bear market rally. It's very typical in Fibonacci terms to retrace, a significant part of the decline between 38% to 50% to 62%. Right now, we've retraced about 50%, but we are going to retest those lows for sure. I'm highly confident of that.
But don't we need a catalyst, David, for that?
This catalyst is we're going to have plenty of bad news going forward, Liz. The unemployment numbers are going to go to the stratosphere. We still have potentially, there's going to be some good news on the virus, but some bad news. It came out today that it's possible that the warm weather is not necessarily going to be a huge, offsetting factor to this. It also came out that some people that have been reinfected and been healed are likely to get it again. There's going to be more deaths. Now, we could start to slow down the new onset, and we could start to slow down the rate of deaths. However, all that's happening because it's social distancing, and we can't live like this. We're going to have to go back to work, go back. And when that happens, then there's going to be resumption of these negative trends. The other big thing, Liz, is that
one thing that hold on one second. One of the things that people think about when they hear that so-and-so is bearish is that they don't buy any equities. You actually do have picks here, and you have to tell us, as we put them up, the common thread between all three of them, everything from credit lending and rent lending tree to Westpac. So tell us what you see there that is the sort of theme.
Well, Liz, these are all short picks. The Ranger Bear ETF is a fund that is all short, and therefore we provide defense, and we provide a way for your investors to offset the risk of their other long positions. And so all these companies are ones that we feel like will do worse than the overall market. We're trying to create alpha, and we've created a lot of alpha over the last couple months, where we outperform the inverse of the index. These are companies with poor quality of earnings. These are companies with a lot of debt that have declining free cash flow, that a lot of times are playing games with their account in order to show better numbers, and organically they're really experiencing.
So, ticker symbol CACC, and then lending tree is LT, and then you like to hate. Let's put it that way. These names, it's true that short sellers like certain stocks because they think they are going down. But today, we do definitely see a pretty significant move to the upside, David. So we have a long weekend due to the Easter holiday, and when we come back on Monday, if there is sort of hopefully a dearth of bad news, we don't see it, then give us a sense of where and how long it'll be before, your short bet pays off.
So, Liz, truly, this is an unprecedented time. I mean, this is going to be the biggest economic decline that all of us have experienced in our lifetime. I think that we are going to face a depression. We could have 25% decline in GDP for the second quarter. We're going to have a lot of companies' earnings fall apart. There's going to be some optimism as far as better, results at the margins, sometimes on the virus front. But if you look at the earnings front, you look at the GDP, our economy is truly fallen apart.